they're above 550 to 700, you will receive. If we move to units, you're looking at triple that.
Sam Eason from Exclusively Managed shares an on-the-ground market update of what areas are still hot in the rental market in 2024.
Ashgrove, Paddington, Barden, they're always going to have stronger amounts. Pressure-wise, Kalane, Griff, anything that has direct access to the Northern Highway.
As well as behind-the-scenes understanding of what to really look for if maybe your PM's dropping the ball.
I firmly believe they either have no understanding of the market or they're really trying to just get them leased as quickly as possible. A lot of the inquiries we are unfortunately seeing are actually...
I'm Todd Sloan. This is the Pizza and Property Podcast, and you're listening to my chat with Samantha Eason about the Brisbane rental market update.
Samantha Eason, how you going?
Yeah, good, thanks, Todd. How are you?
Good. It's good to actually finally meet in person.
I know, and it's actually nice that you actually came up to sunny Brisbane.
One of the changes that I wanted to talk to you about is how the market's been changing in Brisbane as well, because Brisbane has been one of the hotspots of the country for quite a while now. You're talking to hundreds of people all the time, if not thousands. It's the stuff that the data tells us later on, but that's the stuff that you can tell us now. So the biggest thing I wanted to ask you was, where is the highest pressure you're actually seeing in the Brisbane market at the moment?
North Brisbane, we're finding a lot of the 3-bedroom, 4-bedroom homes, they are getting snagged very quickly.
Okay.
So what we're finding is if they're above 550 to 700, you will receive a decent inquiry, but maybe the first or second inspection, you will probably get maybe 10 groups through at a time. If we move to units, you're looking at triple that in the city for the same price from 550.
And when you say city, you're talking just CBD or CBD and surrounds?
Yeah,
or?
surrounds. So like Mitchelton, Everton Hills, Cannon Hill, for example, like anything that's close to the city and then it's a unit, it doesn't have to have those extra amenities like a pool or anything like that. Where I have discussed with a couple of the sales agents that we work closely with, they are finding that units are also receiving a really good interest from owner occupiers, whether that's first time or someone who's downsizing. And then the same with us as property managers, we are seeing the same thing with tenants.
So what are you seeing demographic-wise around that then? Is it pure more younger people, older people? Like, is there any kind of like real focus, or is it a bit of a mixed bag?
It's actually a bit of a mixed bag. So the last unit I rented personally, it was to an old couple. And that was around 600 a week, 650 in Ashgrove. So that's Ashgrove. Ashgrove, Paddington, Barden, they're always going to have stronger amounts. If you move to Mitchelton, Everton Hills, and Albany Creek, it'll be a little bit less, so around 500, 550, or in between that with regards to rents for units. The further that you move out to the northern suburbs and you get closer to North Lakes, Burpengary East, there is a few units available. But the demographic is different. So what I have found with houses around that side, go back to units. What I found with houses is a lot of people in Morayfield, Narangba, Burpengary, North Lakes, Kalenga even. They want space, they want yards, they usually go camping a lot. Like, it's the demographic. If a client comes to me and says, hey Sam, I've got a 3/4 acre property, it's relatively modern or it's not modern, they rent really well because it's the size that that demographic wants. In the city, we could be finding pensioners, or we could have a lot of first-time tenants or just couples that are either waiting to buy and go through the first homeowner side. Like, units have always been transitional. That's just them.
So one of the big reasons I always like to chat with a PM in all different states is to find out really where that high demand is, because then if you can correlate that to a good solid investment strategy, you're on the right path. But what I'm hearing is a lot of the demand is probably for inner city units, which doesn't always correlate to amazing investment strategies, but could maybe be some really good news for people that potentially bought a little while ago and are now really seeing some uptake in their yield where they could have been a little bit more stale for a while.
Yeah, well, I agree with you. So they're not good purchases. 9 times out of 10, someone who's bought a unit has been told that this is a great idea and, it's going to triple in value or something like that. Or it's part of their super.
Yeah.
And so That's usually what I hear. Hey, I bought this off the plan. It's a fantastic purchase. Not really. So I agree. I've listened to your show. I've worked with a lot of the buyer's agents that come on your show. So I know the value is in the land. It's not in the unit. Units being transitional mean that on 9 times out of 10, you'll have a tenant every year. You've got to pay the lease renewal fee. Then you've got the body corporates. Then you've got the additional fees. And then when something actually goes wrong with the unit block, you've got to pay more to go into the sinking fund because maybe the complex doesn't have it.
You get a
So-
special levy here.
Yeah, so if you bought the unit 30 years ago and it's a brick 80s built unit,
Something in a smaller complex.
yeah, like
Yep.
a 6-pack, fantastic purchases. So renovating one of those, especially, we did a renovation in one in Indrapilli 4.5 years ago now. That unit is worth $650 a week in rent, and it's a 6-pack. It's just a 2-bedroom, 1 bath.
Well, speaking area-wise, because I know we're on a bit of a time frame at the moment, we've got to start wrapping things up, but I wanted to get a few other areas out of you that you were really seeing some high pressure from, and anything else people need to know about them.
Yeah, so pressure-wise with houses, we're finding that Kalenga, Griffin, anything that has direct access to the Northern Highway, like the north end of Brisbane Highway, that you can go south, you can go Gold Coast, you've got access to every other road, you can catch a train into the city. So that would be probably Kalenga, Burpengary East, Narangba especially, because it's a little bit out of the way for a few more people without being too close to North Lakes, without also having to pay the price of North Lakes or Mango Hill. So North Lakes and Mango Hill at the moment for an average 4-bedroom property, nothing special, no pools, you're looking at $700 a week in rent. You could get the same in Dakaben, Kalenga, Narangba for $600, or in some situations, if it's older, $500 to $550.
And this is why you're seeing more people pour into suburbs like Narangba.
Yes.
Gotcha.
And it's because as well the space, estates came in after the fact where they were all like cramped in and tiny. So they may
Right.
be older houses,
Okay.
but those are the first ones that I'm going to buy.
Beautiful. All right, Sam, is there any final words of wisdom or anything you'd like to leave with everyone today as far as what they should know about the Brisbane market update mid-2024?
Yeah, so I think if you take into consideration what we're seeing and what you're hearing, that there's a massive rental crisis, I think you should probably focus around, it's not so much a rental crisis, and I've discussed this with a lot of property managers in our industry in Queensland.
You're saying it's not a rental crisis. It's a pretty
No,
provocative thing to say.
I know, and I'm probably going to get a little bit of hate, but it's unfortunately an affordability crisis, and I'll give you an example. I'll give you a few. So
Okay.
I rented a property in Kalenga. It was a 3-bedroom, 600 square metre-ish so block, 1-space garage, 1 bathroom, relatively modern. I wouldn't say very modern, and I definitely wouldn't say luxury.
Okay.
$550 a week. We had over 30 inquiries on it, but only a third of those people showed up to the viewing, and only 1 person was suitable for that property.
And that was
out
at
of the
$550 a week?
applications. That was $550.
Okay.
The reason why is a lot of the inquiries we are unfortunately seeing are actually, they're subpar tenants. There's a red flag on their application, they may not have received a great rental reference, or they wouldn't meet affordability, and they're just trying. Our job, unfortunately, as a property manager is to express our concerns.
You get paid by the landlord to pick the best person for the
That's
property.
exactly, and
Yeah,
it's
or
easier
help
for the property
choose.
manager.
Yeah.
It's easier for the property manager if we pick a great tenant. So agencies where they have a leasing manager just go out and lease the property. They're not managing the tenancy. So their job is to find the quickest tenant in the fastest amount of time.
Care factor's lower.
Yeah.
Yeah.
So it is our job to find the best tenant. Best way to do that is to talk to our tenants and at viewings, see how they are. There are people with unique situations. But if you get a better understanding of what they're doing, you can work with them, and maybe you've got a different property coming up that is better suitable to their needs if it's not the one that you're meeting them at. The issue, though, that I'm finding,
Yeah.
I'm still seeing a lot of people that will say, look, we had 40 people at our viewings, and if that is the case, you're either in a really low demographic or the price on the property is too low. Because at a lot of ours where we really test the market and have our clients ahead of the market, we've had 10, maybe not even.
I've got to ask, okay, because as former sales days, price it low, watch it go. It was a strategy some agencies would use. And I myself would always push the boundary, but never break past what was reasonable. There were some that absolutely went past what was reasonable. It's every day of the week, it was a $600,000 property, and they'd advertise it for $490,000. And they'd have 1,000 people showing up. Not 1,000, but lots of people. And then they'd bid the price up and it'd go past 600. I often wondered, I'm seeing this now in some areas in Adelaide, where all of a sudden the rental prices have dropped. And it almost feels like a price it low, watch it go, like kind of strategy. But I don't see a benefit for the property manager to do that.
No, I don't think they understand the market. So I can't talk for Adelaide, but I can talk for Brisbane. Deception Bay, for example. I have some really big houses in Deception Bay. They're big blocks. They're probably built around the same time that some of the original houses in Dakabin were built. So if you remove the zoo, Alma Park Zoo, and you've got houses surrounding that. They are generally rather large blocks. They should be around 700 plus per week. People are still advertising homes in Deception Bay for 500, 450. I don't think they've got an understanding of the market. But as I tell every client, so if they list, and I say, look, I'm going to be honest. One, we ask them what they expect, because I need to know if it's reasonable and if I can work with their expectations.
Yeah.
And if they say, look, we want this. If I come back and we've had the the photography completed and everything's ready for advertising, I'm like, look, there's been a bit of a change. This property's recently been leased. Let's go for something a little bit higher. And I go for that higher amount. My job is to get it leased. You don't know unless you try. So if we go...
Sorry to interrupt. So you reckon that the agencies that are really putting that price down, they basically just don't know the market?
They're doing it because it's easier. If you're a bigger agency, you've got more properties to lease and rent.
Yeah, okay.
So what do they want? Look, we're too busy as it is. The industry is absolutely chockers at the moment. Everyone is busy. I firmly believe they either have no understanding of the market or they're really trying to just get them leased as quickly as possible. And I can put this on. You give me a property and I'll tell you what it should rent at.
I know we've already run over time, Sam, but very quick final question. If you can do this in like a 15, 20-second answer, I'm putting you on the spot. If someone thinks that the property manager is maybe just taking the easy route and putting that price down, what's one question that you could ask to try and like flush out? Is that actually the market and they're being honest? Or are they just trying to get the easy one?
Call a different agent and ask them, hey, look, I have a property. What do you think it should be renting at? It's relatively well looked after. Give a little bit of a description. And then just go from there. But you have to at least test the market. Most advertisements are completed within 4 weeks. So if you're not trying for the most that you can get at week 1 and then decreasing it through the advertising campaign, the property manager isn't doing their job well.
Samantha Easton from Exclusively Managed, thank you so much for jumping on the show. Always appreciate your time.
Thank you very much for having me, Todd.